Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for the 14th day of May, Thursday. Well, they had their first meeting, and I guess you could say it could have been worse. I don't know. You've got corn down a nickel. You've got beans down 15 here. Now, this is coming off of making new highs. So we've been on a pretty good rally going into this. Even last night, D's corn hit 505 and a quarter. The high of the move was 6 and a quarter. The contract high is 12. So, even if you've done nothing, 498 is still a heck of a lot better than 445, right? Novi beans hovering around $12. Had a high last night of 1209. Traded down to 1190. Not that unusual to see, a 20-cent trading range in beans. That's the way beans trade. In the wheat, interesting. You're unchanged in Chicago. KC is a little bit lower, down 3 cents, but it was down about 10 cents overnight. So it feels like maybe some people that got long after that USDA report are now in trouble. I mean, KC traded as high as 750, and it's already traded last night back down to 714. So one reason we try to reward rallies with our rolling up our puts. Remember this one adage, I can't say it enough, nobody sells the highs. And nobody had wheat being limit up after that USDA report. And that was the odd thing. I wrote about this in my letter, Robinson Ag Marketing. I would have thought that corn and would have been a lot higher with wheat up limit. So that was my only question there. So we know this, the funds are long all the grains. And we are all waiting to see if there's some news about will China step back up to the plate and buy beans. No specifics yet. So that's kind of where we're at. Crude oil back sitting here at $100 a barrel. The interesting thing in that meeting, China did agree that Iran should not have a nuclear weapon. That's probably a biggie. But there was nothing said that they were going to help solve the situation. I think China's more interested in how the Taiwan issue is going to work out. So we'll have to wait and see if there's any real big shocker news that comes out of this meeting. Hopefully there isn't, honestly. Hopefully that they say, well, we're going to buy more beans or something like that. What we didn't want was a negative outcome, right? Everybody was worried about that. Moving on to the protein complex. We made new lows, got hammered on the opening yesterday, and then came back and rallied into the rest of the day. You had fat cattle up $5.50. You had feeder cattle up $4.37. You had June hogs up $2.40. June hogs have had a big June, July, August. All those hogs have had a big sell-off as of late, giving back 62% of the rally that we had. Is this just a recovery bounce? I don't know. We'll have to wait and see how that moves on as well. But it did give everybody an opportunity to sort of re-hedge if you haven't got anything on the books. I'm a big believer that if you are selling animals into 6-month lows in the hogs, that it probably makes sense to reach out and buy some cheap calls. Not because I'm promising you that hogs are going to rally and you're going to make a bunch of money on your calls, but it's not bad risk management if you're selling animals into 6-month lows to say, hey, you know what if 2 months from now we've had a recovery and you don't have to spend a whole lot of money. Some people like to do it. Some people don't. Some people, consider like they're throwing good money after bad. I understand that, but you never know when a market's going to turn. And if you'd like to participate in it, you have to have the hedge on before it happens. Vice versa for being long all your product and not defending the rally. We had a $1.80 rally off the low in beans, right? From 10.55 to 12. And, we've had a 60-cent rally in corn. You've got to defend that rally with substitute sales, and the substitute sale is a put. The rub is, and the reason why people don't want to do it is because there's a cost associated with it. But there's, it's a business decision, and it's hard to spend more money in a year where you begin the year and you're worried about your inputs and everything else and your profitability level. At this point, if you don't know what your profitability level is, shame on you, right? You need to know what that level is, and you need to defend it, because in January, I think a lot of you would have been interested in knowing that we would get to 505 corn. Right now, I know for some of you it's not enough. It's never enough. I understand that, but it could be the difference between farming for a break even or a small profit this year versus farming for a loss. And nobody needs practice farming, right? This is not spring football. Okay, guys, that's my 2 cents. Have a great day. Chris Robinson, Robinson Ag Marketing, 312-638-8868. If you're not getting my letter, get it. It goes out every night. Once the markets are closed, I dig into all the levels. So you start the day knowing where key levels are. I think that that's the one thing that my letter offers that a lot of other ones don't. Obviously, it's a competitive marketplace. There's dozens of guys doing what I'm doing. Hopefully you like my product. Guys, have a good rest of the day. Take care.